Hey, gang. Today I'm going to be talking about how not to invest in rental houses. In other words, how not to invest in rental properties. Because since 2016, I've been a real estate investor. Since high school, I've been an entrepreneur. And I've met a lot of motivated landlords that their houses were going down to foreclosure auction. And I came with a list of things that I look for before I buy a rental property. So, how not to invest into rental properties. So, let's get off with the number one idea, which is the most important idea, which is positive cash flow. Okay, positive cash flow. I can't tell you the number of motivated sellers that I met that were professional landlords in the last crash that owned properties that had no positive cash flow. And I met a lot more that every month they lost $200 or $300 a month, which becomes thousands of dollars per year and year after year because they own the property. In other words, they were subsidizing the sellers. I'm sorry, they were subsidizing the renters' rent. So they were like paying for someone to live in their property. And for me to do a deal, the very first thing, if it's a rental property, I'm looking for is cash flow. Cash flow. It has to cash flow. Now, some people say, well, Mike, how much does it have to cash flow? Well, the simple tell of it, what I look for is that it has to pay my PITI, which is principal, interest, tax, and insurance. Plus, it has to pay my vacancy cost. Plus, it has to pay my property management. Plus, it has to pay me a profit for taking this risk. Okay. Uh, Now, that number has moved for me versus the last crash because the last crash, sorry guys, a little dirt on my lens. The last crash, interest rates were so freaking high, where in 2020 and moving forward, interest rates are going to be so low that that means that the properties are going to cash flow tremendously. Now, the other thing that I look for when I buy rental properties is that I negotiate a non-recourse loan on my note. What that means is simply put, the mortgage is a non-recourse. Now, what does that mean? It means that normally, traditionally, when someone goes and buys a home and they borrow money from the banksters make the borrower do two things. They make him sign a note, a promissory note, okay, which says that, hey, if you default, we're going to come after you personally. Two, they make the borrower sign something called a deed of trust, DOT, which says, look, if you default, you pledge this collateral, which is this house. In case you default, we're going to come after this collateral. So the borrower basically ties both of their hands behind their backs. One, it says, look, you come after me personally. The other one says, look, you come after the collateral. What I do is when I negotiate buying rental houses, especially in 2020 and moving forward, is that I'm negotiating a non-recourse loan that says, look, banker, or in this case, seller, because I use OPM, other people's money or other people's mortgages. I say, look, you can come get the collateral. So I'm willing to sign a deed of trust, DOT, and pledge the house, the property, as collateral in case I default, in case I don't do what I say, to protect the bank, right? Because, they want that. However, I'm not going to allow you to come after me personally because you're going to go after the property. So you're not going to get both. Okay. And that's very, very important to me versus the traditional way because I have my arms twisted and I can't do anything if I go traditional way. Majority of lenders are going to want for me to sign a promissory note, which I don't want. I do not want to. I want to sign a non-recourse loan. If you want to learn more about that, go to mrnofluff.com. I do have a more detailed free video in my training section that talks about non-recourse. Just type in non-recourse on the website. Now, the other thing I look for um, when I buy a house, and many investors don't, is they deal with non-motivated sellers. And what I look for is motivated sellers, motivated sellers, motivated sellers. I'm not going to buy a deal unless the seller is super motivated. Okay, I'm not just going to do a deal. And I see a lot of investors make mistakes or new people make mistakes because they buy a property from a pro. They buy a property from someone that's not motivated. Okay. They're both pretty bad deals because if they're a pro, they're probably getting something off of you. And if they're not motivated, then they're getting top dollars for their property. And that's not what an investor wants. Okay. Now, the other thing I never do when I go buy rental properties, rental houses, is to deal with banks. I don't deal with banks. I don't like banks. I don't trust banks. And that's why I've created in the last crash, 2006, fourth quarter, something called OPM, other people's mortgages. Because 2020 and going forward, 2021, 2022, 2023 are going to be massive, paying for the retail buyers that bought homes in the past 4, 5, 6 years. They're going to be hurting so much because of house prices coming down, that I am going to use their existing mortgages as a financing for me. So I'm going to, in other words, find motivated sellers, give them an offer that I'm willing to buy their homes. I'm not going to pay cash. I'm not going to get a loan from a mortgage company. But what I will do for them is make their monthly payments and take over, in a sense, their mortgage. But I'm not really taking it over because they're still responsible for that debt. Now, it sounds like no seller is going to want to do that. Trust me, when I started, I didn't think any seller would want to do that either, but there are many sellers that did it in the last crash, and they're going to do it in this crash because this is the season of motivated sellers, guys. The market has changed. Okay. If you have any questions, leave it below. I'll be happy to answer for you. Don't forget to click the like button, share this message, guys. And if you're new on YouTube, subscribe, click the bell to get economic updates, learn how to buy houses, and how to be a entrepreneur in your dreams without debt. Okay. So let's move forward on how not to buy a house, rental houses. There's a lot of people that and investors that don't understand the real estate cycle. Okay. For example, if you looked at 2016 till 2019, we're at the very tip of the top cycle. So anyone that bought it between those ranges are going to have, more than likely, I would say 99%, 90%, are going to have negative, no equity, or marginal equity, because the market prices are going to be coming down, and anyone that bought it at that price is going to be upside down. So understanding that the cycle, if you want to become a, not you, but for me, when I'm investing in real estate, is very important. Am I buying it when the market is going up, or am I buying it when the market is coming down? For me personally, I don't like to invest when the market is going up. I don't like to invest because, you know, I'm not a speculator. So I don't like to do that. There's too much competition. There's all the retail buyers. Everyone can get a loan. So I don't like to buy properties when market's going on. I like to put my foot up and, work on businesses, starting businesses, and stack the cheese, as they say, for the depression, for the recession, which we're in right now, because we're not only in the biggest recession, but in my opinion, we're in the greatest depression we ever seen, not only in America, but globally. But I'm just focusing about today. So understanding the cycles of real estate, understanding that prices will come down, and understanding that prices will go up, and realizing, when am I buying this property? Okay. Um, what cycle? Because the cycle will determine when I'm buying and when I'm exiting. Okay. Very important. And not enough people are patient enough for the cycles to occur, like a recession or a depression. When they have, that's why a lot of people get burned. They may have a successful business, they're making millions, and they get into real estate at the wrong time and pay too much for it, and they don't know how to make the real estate or the property profitable for it. Okay. Now, another mistake that I see a lot of investors do, and this is something that I do not do when I buy rental properties, is that I don't buy the biggest house on the block. I mean, absolutely not. I'm not looking for the biggest house on the block. And that's a really bad mistake, because when it comes to your exit strategy, when you want to sell, it's hard to sell that property. And, it's harder to rent out bigger properties, right? What I focus on is first time home buyer. So I don't try to go into, mega mansions or $500,000 homes if the average home in the area is 150 or 200. I don't do that. What I focus on is first time home buyers, because there's so many of them, and it's going to be easier for me to rent the property. Which brings me to the next point is that when I look into a rental property to buy, one of the most important thing is that if this rental property is not being rented, its money's not coming in. So what I look for is DOM, days on market. I don't want a property that's in BFE and there's no jobs and it's going to take me a year and a half to find a renter. What I want is a property that's going to take me 15 days or 30 days or 45 days to find a property. The longer I have to sit on it to find a property, the more of a liability and risk that it becomes for me because now I have to pay out of my money. So instead of being a positive cash flow, which is the number one point that I'm looking for, now it's becoming a negative cash flow. And so days on the market is very, very important for me, guys and ladies. If you have any questions, leave a comment. I'll be happy to answer it for you. Don't forget to click the like button, subscribe, leave a comment. Let me know how the market is in your city. All right. Now, this is something that I see all the time, and I made that mistake myself. Okay, not to the extent that I see other investors do, but I have also made that mistake. That is that when I buy a rental property, I've seen a lot of people that overdo it. Like they think this is their home and they're gonna live there, and they're overdoing it. Okay, and that's absolutely a no. What I do is when I buy a rental property, you know, I use the same color in all the houses. I use the same color of paint for the walls and the ceilings. Like I take away the carpet and I put vinyl. And when I put vinyl, I go and buy vinyl. And negotiate big and buy it on pallets so I could use it for 10, 20 houses. Okay. And I could come back and use it 5, 10 years and I still have a stack left over. So I make everything look like assembly line. Like all the houses have the same color, have the same vinyl. So if something happens, I don't have to redo the whole vinyl, the flooring. I can just go put one little strip there because I have more surplus. Okay. So I make everything look the same. Okay. Um, and I've seen a lot of investors will overdo it. And I've done it in a sense, not because of like, hey, I'm going to live here, but I've done it with like, instead of putting a $100 fan, I went and put $500 fan. And I learned my lesson because I try to make all the fans the same. And I bought more expensive versus, what it is, entry level home because I'm not going to live there. I just want it to be safe, functional, and a reliable unit where I don't have to replace all the time. And I'm not living in there and, you know, not to overdo it. So I've made that mistake myself, and that's why I'm sharing it with you. But it was just like minor things where like I bought a $500 fan versus $100 fan, or that was still as good, but it didn't have the bling bling on it. Okay, and small things like that, like upgrading the fixtures a little too much instead of getting a light bulb one certain way that costs $10 versus getting one for 50. I got the one for 50, and I quickly learned that those things are not going to decrease my days on the market versus there's other things you can apply. Okay, now here's another major thing that most investors, they get into the business, don't do it. So this is how not to invest into a rental property is not knowing the eviction laws in your city, in your local area, because being a landlord, it requires eviction. I mean, there's no buts and ifs about it. I don't care how great you are, how good you are. Evictions are part of the life. It's kind of like eating. When you eat, you got to take a shit, right? Same thing with the landlord business. If you're going to be a landlord, you're going to have to do evictions. I don't care how great your systems of filtering is, shit will happen. Okay. So not knowing the laws, not knowing the eviction laws, not enforcing those laws are very, very crippling for a business. And thank God I've never had that problem right off the first day I started. I had a property management, which I own myself. And I had a broker that took care of it, but that was like something that we're always on top of it. Like there was no breaks. When they were late the third day, we sent them the notices and we went through the proper channels of moving forward with an eviction. We were not listening to their stories. Like we'll listen to their stories, but we're still moving forward to getting them out of the property. Okay. Okay. Here's another major something not to do when you get into the rental business is to tell the renters, okay, you're the owner. That's just like the worst major thing. Now, you're the owner, great. They don't have to know that you're the owner. I never tell. First of all, in all the years that I've owned rental properties, I only talked to one renter, and that was it. Okay, and that was the time when I terminated my property management. But one time, out of all those years, never met the renters, never talked to them, etc. Okay, but I tell you, never tell the renter you're the owner, because that creates a negative connotation for the renters. Renters already don't like landlords. They think they're, bukus of money. They look at them as piggy banks. And if they know you're the owner, they're, they want to have favors with you. So it's better to, if I did interact with them, just say I'm just a property manager, or it's none of their business, right? But I'm not gonna volunteer or let them know, hey man, I'm the owner, blah 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 blah. Okay, that's why it's great to have a property management, and that's why I said it in my formula before. Have a property management, but still, I still know the laws and the procedures, because it's really good to know it yourself versus just outsourcing it. Okay. Now, here's another thing that I always see investors, even pro investors, miss on, is extra ways to generate cash from that asset. And I mean, simple things that I've personally done with my rental properties is, for example, put a washer and dryer, charge an extra $100 a month. Okay, charge an extra $80 a month. Okay, or provide lawn services. And if the guy charges you 100, you charge them 150 or 125, things of that nature. Where that property, instead of just getting you that $1,200 a month, now you're getting an extra $150 or $200 you're squeezing out of it that you wouldn't normally have, which becomes thousands of dollars in a year, which then becomes thousands of dollars over 5 years. And if you have multiple properties, then that's just like an extra car or extra house or whatever that you didn't have. Okay. Now, let's see if I miss any of these points. All right. Now, this point is very, very important, because we live in a society where everyone's about growth and growth and growth, guys. Hey, don't forget, guys, click the like button, share this message. I really appreciate it, for the Google algorithm and Facebook algorithm. Thank you so much. Okay. Now, we live in a society where it's all about growth, all about leverage. Everyone's telling you how to leverage. But for me, I always think about, what is the end game? Is the end game for me to be debt free, not to have a master, or is the end game for me to be banked owned, to be leveraged out? And for me, is not to be leveraged out. So I don't use my rental properties as an ATM. I don't refinance out, so I don't have to pay taxes. But I take the money out and I have a lot of debt. I'm not gonna, use my house and get loans against it or any of that. My goal is, when I buy a house, OPM, other people's mortgages, is to put renters in there, babysit the house while the renters pay off the mortgage, and then own the house free and clear. Okay, I'm not trying to use it as a collateral instrument to get into more debt. I'm not trying to suck up all the equity out of it. I'm not trying to do any of that, because the end goal for me is debt freedom. Okay, not to be banked on or not to be leveraged out. And I know there are so many people that are going to go against what I'm saying, because we live in a debtpreneur society where if you borrow $1 billion, then you're a billionaire. If you borrow $1 million, you're a millionaire. And I don't see it that way. Okay, I see it that debt is slavery, is going negative. I don't care if you're a billionaire, but you're indebted to billions, then you're negative. Okay, so my end goal is to never borrow money from banks. Deal with motivated sellers. A lot of sellers will have mortgages on their homes, and have them be my private bank through my program called OPM, and negotiate a non-recourse loan, and then put renters in there, deal with all the headaches of babysitting the property, because the truth of the fact is there will be required work like evictions, repairs, and so on, and then wait around for the cycle, because it's all about cyclical. I'm only getting into real estate when the market is on fire, when there's blood in the streets, there's fear in the air. I don't get into the real estate game when it's going up. So, you know, I'm buying it from motivated sellers, and I'm babysitting it, and I'm waiting for the cycles to come up, because since the history of America, real estate has gone up and up and up. Okay, so eventually it's going to come back up. Okay, this is America, the best country ever, guys. Now, the other thing is that I see a lot of people do, and I would never, never, never do this, which is very, very easy to do if you're just focused on leverage. Okay, is to and not have enough cash pile to be a landlord, because to be a landlord is kind of like having kids. You're going to need diapers, you're going to need food, you're going to need clothes, you're going to need shoes. And same thing with a rental property. You know, not having that cash pile there just for those repairs, for oh shit happens, oh shit the AC broke, oh shit someone stole my AC, oh shit I got to do an eviction, oh shit I got to pay that realtor first month because they brought me a renter, oh shit I got to pay uh, an eviction, or I got to pay the constable to go serve that renter. Oh shit, you got to have that money. And I see a lot of landlords, you know, pro and beginners, become motivated because they don't have that oh shit money laying around somewhere. And you know, the question is, how much do you need? Well, it's not as much as most people think, but you know, I think for every property that you have, you know, for me, and for every property that I have, I'll have at least $10,000. And after a certain amount, then you know, I'm not gonna need 10,000 per property, because you know, then the property or the business is generating its own income. And so, but to start off with, you know, I would allocate, for me, I would allocate, you know, acquisition fee, but I would also allocate $10,000 per property for vacancy. Oh shit factor. Doesn't mean I'm gonna use it, but I have that, you know, in a safe lock box, for example, and I'm not gonna touch it for anything else besides for that oh shit factor. And a lot of investors get in trouble because they don't have that oh shit money reserved. And when things are going good, they're spending their oh shit money for vacations or luxuries or cars, whatever. And I don't do it that way. I always keep it aside because I know that time's going to come where I got to use that money, and I'm not going to mess with that money. So I don't think, and this is not financial advice, it's my opinion, but I don't think anyone should own rental properties if they don't have that oh shit money, right? You know, if they're living paycheck to paycheck, or they shouldn't have, because rental properties will require oh shit money. It's called investing because you got to put money into it before you're ready to sell it, or before it pays off itself and then it gives you all cash flow. But you got to be able to invest into it. And many people, you know, think it's a business instantly. No, it's an investment. If you want cash flow, or a lot of cash flow, then you got to start a business. But if you know, even in a business, you got to invest into it here and there by infrastructure. But in real estate, you're going to need it because shit breaks down. Your AC will go, your water plumbing will go. You know, you will have hail damage, and you have to pay insurance, deductibles, whatever the story is. So here were some many different secrets that I had from, you know, being a real estate investor and being an entrepreneur since high school, that I want to share with you guys. Okay, um, now if you're interested in getting mentored by me, I do have two mentoring programs at this time. The very first one is if you want to work directly with me. It's not for everyone. It's, you know, it's for if you're successful, you have a business, or you have some money saved up. It's 3K for 1 month of coaching. It's called my profit sharing. You go to mrnofluff.com, click on mentoring, and then download or read about the profit sharing. Okay. The other mentoring program that I have, which is the best value in the sense of that if you don't have a whole lot of funds, for $47 a month, you get monthly coaching. You also get access to my best and most advanced real estate courses on how to buy houses, owner financing, how to generate leads, how to do cold calling. I mean, everything you can imagine underneath the moon and the stars that I've listed on the academy. You can join the academy. You get the Facebook groups. You get the hundreds, if not thousands, of both training videos. Okay. And you get monthly coaching for just $47 a month. This is a great program to get to meet me, ask me questions, and for me to get to meet you and learn about your goals and dreams for $47 a month. So, again, academy.mrnofluff.com or profitsharing.mrnofluff.com, guys. Thanks for watching. Click the like button. Remember, you live in the best country ever, man. There's millions of people that love to be you. Don't sit around and feel sorry for yourself, or don't sit around and watch other people take action, because in America you don't need money. You don't need money to be your dreams. And one way I prove it to you is that with my new flip, all you need is $100 to start a business and make massive amount of thousands of dollars a month without any infrastructure, without any website or anything like that. So if you're broke, download the new flip. If you got your stuff ready to go. Don't watch around. 2020, in my opinion, is the best time to be a real estate investor because prices are coming down. There's massive motivated sellers out there, and be your dreams. Peace.